Welcome to the Deep Dive. This is where we take, well, a whole snack of research articles, notes, and basically boil it all down to key insights for you. And today we're jumping right into something pretty major, these huge shifts happening in global finance. We're really going to try and figure out what's going on with the US dollar and where it might be heading. And just to kick things off, here's something that should really make you sit up. First half of 2025, the US dollar, well, it tanked. Lost a massive 10.8% against other major currencies. Think about that for a second. If you had, say, $1,000 in January in terms of global buying power, by July, it's only worth $890. That's a $110 loss. Just vanished, maybe without you even really noticing it day to day. And this isn't just, a slight dip. It's actually the dollar's worst first half performance since way back in 1973.
1973, yeah, that's a big one. That's when the gold standard ended, right?
Yeah.
And the whole Bretton Woods system just sort of unraveled.
Exactly. The system that had kind of pegged everything to the dollar, which was pegged to gold. So the big question for us today, the core of this deep dive is this. Is this dollar slump just a temporary thing, a blip? Or are we looking at the beginning of something much, much bigger, a massive financial realignment? We're going to try and unpack why this is happening, who's making the big moves, and importantly, what it means for the world economy and, for your own finances.
Right. And what's really interesting looking at the analysis is that this wasn't like one single trigger event. It wasn't just panic selling one morning. It seems to be more of a toxic mix, as some are calling it. You've got these really aggressive trade policies playing out. Then there's runaway government spending, which definitely fuels inflation fears, makes dollar assets look less attractive. And maybe the biggest piece, a growing feeling globally that maybe America isn't managing its economy as effectively as it used to. That trust factor seems really key.
That toxic mix idea is interesting. So it's not one thing, but this combination really speeding things up.
Exactly. It's like a slow burn that suddenly got a whole lot of fuel poured on it.
Okay, so let's dive into that mix. Who are the key players making these moves? Because someone's definitely pulling levers here, and I think we have to start with China, right? While everyone was focused on the loud trade war stuff, China was apparently fighting back differently, quietly.
Oh, absolutely. More like a silent financial war is how some sources put it. Not tariffs, but behind-the-scenes financial maneuvers. And they were pretty brutal. Get this. Back in April 2025, China apparently dumped $8.2 billion worth of US Treasury bonds.
$8.2 billion.
Yeah.
Wow.
And the really unsettling thing, this news only sort of leaked out recently, weeks after it happened.
So kept under wraps.
Seems like it. And connecting the dots, this doesn't look like just a typical financial adjustment, balancing the books. It feels more like a statement, a signal, maybe, that China's kind of done propping up the U.S. financial system the way it used to.
Statement. Okay. But, we've heard talk about countries wanting to reduce dollar dependence before. Hasn't always amounted to much. What makes this different? Is it just the scale?
Well, the scale is definitely part of it, but it's also the consistency. This looks like a real long-term strategy for China, trying to wean itself off the dollar. And this isn't new, exactly. It's been happening for over a decade. If you look back, say, 2012, China held something like $1.3 trillion in U.S. Treasuries.
Trillion. Wow.
Massive. But by April 2025, that number was down to $757 billion.
So that's, what, almost half?
Pretty much. A 44% drop. That's over $600 billion in U.S. debt they've sold off.
Okay, so the implication there is if China's doing this, maybe others start thinking the same way.
That's the worry. If other big holders start following suit, start selling off U.S. debt, then the U.S. could find it much harder and more expensive to borrow money. And that could seriously shake the foundations of the whole global financial system.
Which brings us to how the U.S. government actually functions, right? It kind of relies on being able to borrow easily. The government spends way more than it brings in through taxes. Huge amounts more.
Yeah, the deficit is enormous.
So to cover that gap, it borrows. Big time. Mostly by selling these treasury bonds, which are basically IOUs.
Awesome.
And that borrowed money funds everything. Military, Social Security, you name it. America's total debt now is, over $37 trillion?
Astronomical.
Yeah.
And growing every year. They issue hundreds of billions in new debt constantly just to keep the lights on.
And the whole thing works based on this assumption, maybe a shaky assumption now, that there will always be people or countries willing to buy those bonds.
Exactly. It's been the bedrock assumption for decades. The dollar is still dominant, sure. Over half the world's central bank reserves are still in dollars. Treasuries are seen as safe. But that dominance isn't guaranteed anymore. If countries really start dumping treasuries, maybe because of inflation worries or geopolitics or just strategically wanting out from U.S. influence, the consequences could be, well, catastrophic.
What kind of consequences?
The U.S. essentially faces two horrible choices. Either jack up interest rates to attract buyers, which makes servicing that massive $37 trillion debt even more expensive.
Crippling, potentially.
Or print more money, which risks runaway inflation, wiping out savings. The Treasury market is absolutely fundamental. If that falters, borrowing stops.
And if borrowing stops?
Government shutdowns, federal workers don't get paid, services freeze. I mean, you even get into the unthinkable territory of the U.S. potentially defaulting on its debt.
The world's biggest economy defaulting. It's hard to even imagine.
It really makes you think, how long can the current situation hold?
Okay, so that vulnerability, the reliance on bond buyers seems pretty clear. And China seems to be exploiting it, not just by selling treasuries, but they were making another move too, right? Something about gold.
Oh, yeah. While everyone's distracted by, interest rate hikes and market jitters, China was quietly doing something else. Selling dollars, yes, but also buying gold. A lot of gold.
How much are we talking?
Well, over the last 3 years alone, the People's Bank of China reportedly snapped up over 210 tons of gold.
Tons.
And Goldman Sachs has estimated that China is currently buying something like 80 metric tons of gold every month.
Every month? Wow, that's about, what, $8.5 billion worth?
Roughly, yeah.
Yeah.
And they show no signs of slowing down. Officially, China says it holds over 2,300 tons.
Nice.
But many experts think the real number is probably quite a bit higher, maybe hidden through state-owned banks or bought discreetly in foreign markets to avoid, moving the price or drawing too much attention.
So why gold? What's the big appeal now? It feels a bit old-fashioned, maybe.
Well, think about it. Gold's appeal is its independence. It doesn't belong to any single country's political system. It's not really affected by, a president's tweets or a central bank's decisions in the same way currencies are. Gold doesn't care if Washington makes a bad call.
Right. It's just gold.
It's the oldest store of value we have, really. It's tangible. Crucially, it can't be touched by sanctions in the same way dollar assets can. You can't print more of it. You can't freeze it easily.
And China saw the U.S. weaponize the dollar, didn't they? With swift restrictions, tariffs.
Exactly. They learned that lesson. So Beijing's move looks like a clear strategic response. Shift away from assets the U.S. controls, like the dollar, and towards something neutral, like gold. It's not just about diversifying their portfolio. It's sending a signal. If global trust in the dollar keeps fading, well, the U.S. economy could be in for a serious reality check.
And this lack of trust, the shift, it's not just China moving away, is it? Our sources are talking about something called the Sell America moment. Apparently, even wealthy Americans are starting to lose faith and are pulling money out of the U.S. That sounds significant.
It really is. There was a Gallup poll recently. Pretty bleak reading. Over half of Americans feel like their finances are actually getting worse. Yeah. And less than a third think the market's going to bounce back anytime soon. That's a big drop in confidence.
And the super rich, what are they doing?
Well, they're not just sitting tight. Reports suggest they're actively moving money, buying up European stocks, adding more gold to their own holdings, and, get this, securing second passports. Apparently, there's been a huge, 1,000% spike since 2020 in Americans looking for foreign investor visas or dual citizenship.
1,000%. That's incredible. That's a serious vote of no confidence.
It's a massive signal, yeah. An exodus of both capital and confidence.
Okay, so if money is flowing out of the U.S., where's it going? Are there specific places benefiting from this Sell America trend?
Definitely. Reports coming out of London, for instance, show major wealth managers, both U.S. and European ones, are cutting back their exposure to American assets pretty significantly. And they're channeling billions into international markets instead, especially, it seems, European stocks and bonds in emerging markets.
Any specific examples?
Yeah, BNP Paribas mentioned that their family office clients in Asia are actively ditching U.S. stocks. They're moving into markets like Japan, China, and Europe. Yeah. They explicitly called it rebalancing to dodge American risk.
Dodging American risk. Wow.
And Bank of America reported. This is staggering. $8.9 billion pulled out of U.S. stocks in just 1 week.
1 week? That's not just noise. That's a stampede.
It feels like a clear signal that global trust in the U.S. economy is, shaky at best right now.
And we can see who's picking up that money, right? Japan saw huge inflows.
Yeah, Japan pulled in something like $4.4 billion in that same week. That was their biggest inflow since April of the previous year.
And Europe, too.
Europe also did well, raking in over $3 billion for its stock market. So the shift is pretty clear.
So why? Why are Japan and Europe suddenly looking so good compared to the U.S.?
Well, fund managers are pointing to a few things. One is valuation. They feel U.S. stocks just got too expensive, kind of puffed up after years of stimulus money and cheap loans. Now, with inflation being sticky and interest rates staying high, that big money is looking for safer, maybe smarter bets elsewhere.
And Japan fits that bill.
Apparently so. Japan's economy was seen as stagnant for ages, right? But suddenly, it's looking like a relative safe haven. They've had recent reforms, inflation seems stable, corporate governance is stronger. Investors have noticed foreign money poured into Japanese stocks for, like, 10 weeks straight.
And Europe. It has its own issues, surely.
It does. Nobody's pretending it's perfect. But compared to the sort of policy whiplash maybe seen in the U.S. recently, Europe's political and regulatory environment looks relatively stable. Plus, Europe is making big commitments now to infrastructure, energy, defense spending. It's changing the narrative from Europe being a risk to maybe being an opportunity.
Okay, but let's be fair. The U.S. isn't totally finished, right? I saw a Bank of America report mentioning that even while domestic investors were selling U.S. stocks, foreign buyers actually put almost $4 billion in.
That's true. There is that counterpoint. So some foreign money is still coming in.
Yeah.
But that seems to be where the positive news stops, unfortunately. In that same period, US Treasury saw their biggest weekly outflow since 2020. A huge amount leaving.
So money leaving the supposedly safest U.S. asset.
Exactly. And even gold, which we talked about as a safe haven, actually saw its first weekly sell-off since January.
What does that suggest?
It suggests investors aren't just shuffling money around within the U.S., they seem to be actively diversifying away from America altogether.
And Europe's benefiting most.
Seems like it. Europe is really cashing in. Over $100 billion has flowed into European stock funds just in 2025 so far. That's triple the amount from last year.
Wow, triple. And the U.S.?
The U.S., meanwhile, has seen $87 billion leave its funds in the same time frame. It's a pretty stark contrast.
So, putting all these pieces together, what's the big picture here? The main takeaway?
I think the core takeaway is that this long-held idea of American exceptionalism, the belief that the U.S. economy will just always be dominant no matter what, that idea seems to be losing its power.
Investors are looking elsewhere.
They seem to be prioritizing stability, clear long-term policies. And right now, maybe Japan and Europe are offering more of that, or at least are perceived to be.
And it's not just sentiment. You mentioned Bank of America earlier. They're actually revamping their European trading operations.
Yeah, aiming to be like a top 3 player in European markets. That's not a short-term move. That signals they see a serious long-term shift in where global capital is flowing.
It really does point towards a potentially fascinating, maybe unsettling future. So after digging through all this, the data, the trends, you have to wonder, can the U.S. government actually manage to turn this ship around? Can they restore that global confidence? Or are we genuinely watching the start of a new era? One where global money increasingly prefers, say, Tokyo or Frankfurt over New York. One thing feels certain. That old assumption, the U.S. as the default financial safe haven, it's definitely cracking. And this feels like just the beginning. If you want to stay on top of these huge economic shifts, make sure you like and subscribe to the Geopolitics Gazette YouTube channel. Their update next week could be really crucial.
Absolutely. And in times like these, with so much information swirling around, it's just so important to keep thinking critically, to look for reliable analysis that connects the dots, helps you see the bigger picture beyond the daily headlines. That's really the best way to make sense of this changing world.